employment-related property tax levy for employees that are no longer part of the county because of the nursing home and the hospital being sold. Replacement tax up a little bit. I guess each of these next three areas is a trend that we're seeing in governments now, that these state revenues are up a little bit, not significantly, but replacement and income, the state revenue, the sales tax being local revenue, it is up a little bit from last year, and motor fuel tax pretty constant with what it's been. So those are the tax revenues, and then we just put that in the form of a couple of pie charts. You just kind of, you can see that from the bar graph too. I mean, property tax is a large part. But
Can you go back and explain why the property taxes went down?
The
400,000 to 270.
Yeah, the levy was less.
IMRF levy.
Yes.
Okay.
Yeah, it is the IMRF. That is correct. I can, if you want, do you want a place to look to for that, or did that?
Yeah.
Okay. Very end of the audit report that we haven't gotten to yet, page 103, or you just want to write it down and look at it.
I'll just write it down and look at it later.
Page 103, exhibit 38, you'll see the municipal retirement. You just take that line across. You'll see that. Okay, and then again, just the pie charts are going to show you the same thing. You know, the graph charts show you the amount of property tax as a percentage of total tax revenue went down a couple of points. And actually that 67, if you added those up on the 2012, it's 1 point short of 100%. It didn't round up like it should have on this formula that we did. It should be 68%. So actually we're down from 68% of tax revenue being property tax to 65%.
I've got a quick question.
Yes.
Because we've had several people in here come in and state that their taxes didn't go down any. So are you trying to tell them that their taxes really are going down?
You know, I'm not that closely involved with the assessor to really look at all of that, you know, and be able to comment on that. I just know overall for the county.
I'd just like to have some ammunition when they come up and say, well, our taxes haven't went down.
Yeah, I mean, there's a lot of other factors involved with individual tax levies that I wouldn't be able to address. Expenditures then, we have comparing 13 and 12. I think some of this would come from the, you know, what we just talked about, employee benefits. Obviously that is down for the same reason, for less employees. We do see an increase in the correction expenses. We also saw an increase in revenue. I mean, more activity there. Transportation, most of that increase in 2013 was flood-related grant expense, also increase in revenue for the FEMA. And then we give a chart that compares expenses and revenues. These are just the direct revenues. These don't have any of the tax revenues in here. These are just direct charges to offset these expenses. So we know that in some of these areas we don't have a direct. That's why we're levying. I mean, the employee benefits are all levied for. So there isn't any other direct revenue offsetting that. There is some in the general government, in the public safety. The corrections here also, and this is just the way. I mean, that's why we did that schedule. It does try to pull from different parts of the audit report. This is just one part. So I would caution you from really looking too hard at that because it is just one part of the audit. But it does show up on this graph and chart. Transportation, again, some expenses from the grant revenue is up. We've got expenses down there on some road expenses, and public health is up a little bit. And then you can see 2012, the comparison, that same comparison. So this just shows you really the shortfall of the direct revenue that has to be covered by the tax dollars for these county-wide expenses. So that's an overview, and realizing that when you do an overview, it brings up a lot of questions, I'm sure, and this isn't going to answer those specific questions. And probably my overall comments here won't either, but we certainly are happy to try to address anything we can get back to keep along on the, just concerning the time. But let's go through a couple of numbers in the financial statement itself, especially some of the things that Ted alluded to. I want to show you how those are in the audit report. So let's go back to page 14 of the bound report, which is statement 1. And the two main differences between last year and this year in the financial statements, the one we already talked about was the sale, which provided not only cash, but also net income or a gain, because we didn't have those on to begin with. That, and then we also, since the nursing home was sold, the farm, now still belongs to the county, was brought onto the books. That's what the business type activity column is mainly there, that's new this year. That is the farm. Now, that was set up at a value that the farm was originally recorded on the nursing home at. That is not, not indicated or not meant to be a value. It's just a cost number, the $210,000. We're not allowed to record it at a current market value or estimate anything like that. It is only at the original cost or the original amount, maybe when it was donated to the nursing home, what the cost was at that point. So that is recorded there as a new column. Those are the two main differences. This is the entity-wide financial statement, so it brings all of the funds together. And if you come all the way to the bottom, I guess the one number I would want to point out under net position, which does give a breakdown of the different areas that the county has. And all of these are positive coming down to the bottom line, which is unrestricted. So every area that the county's, I guess, required to keep aside money for restrictions, we have positive balances, which would be an issue if we didn't have more of an issue. So those are all positive. The last line is a negative. It is very similar to, it was about $240,000 negative last year. That's everything else. That's the unrestricted balances on a full accrual basis with all of the fixed assets being depreciated, all of the liabilities of the county, everything being included in one column. It is a net negative position of $263,739. So we'll go to the next page and see how the overall net position changed from year to year. This is again on the full accrual, so we have depreciation in here. On the far left, we list all the expenses. And then we move from left to right in the revenue, the direct revenue, just like we did on the chart. The direct revenue is taken off of those expenses to come across to a number that needs to be supported by general revenues, taxes, generally. And then so we come down to show those taking care of those expenses. When you come down, you see that you see there in the middle the gain on sale of capital assets, $2,218,000. With the amount last year of $495,000, that's about $2.7 million in the last 2 years of money that has come in to offset operating losses. So the bottom line is showing a net change in net position of $1.3 million positive. But what Ted was referring to is taking that $2.2 million away from that, because that's a one-time revenue item. That's where he got it's $885,000. He was saying $900,000 operating loss. That number last year was $464,000 when you took away the sale numbers last year of the airport. So this kind of gives it all in one place without looking at, we will look at least the general fund and some of the major funds, but this is the county as a whole on a full accrual basis. As the other way of looking at that is the $885,000 operating loss, almost $400,000, almost half of that is depreciation expense, which is a non-cash. I mean, it's not cash going out the door, but it is an expense being reflected in the financial statement. And so the year before, just to carry that a little further, the $464,000 loss, it wasn't quite $400,000 of depreciation. I think it was about $325,000 the year before. But you can see that would have accounted for a lot of that loss from the year before, the depreciation. So that's the entity-wide statements. We are still required to present all of the funds that are being levied for, that are being accounted for by the county, and there are a lot of funds. page 16, the next page, only shows the major funds. They have to go, again, through a test of their level of activity and their level of balances to be determined to be a major fund. The major funds are here, but every single fund is included in the back here. So you can track every fund in comparison to the budget. But on the major funds, the general fund being the one that I really want to point out here, I guess. Again, I'm just going down, and if there's more questions, we leave it on in the essence of time. Looking at that unassigned, which is like the unrestricted on the first one we looked at. The unassigned at the very bottom of the fund balance is a positive number of $426,000. That is a betterment from last year of $1.2 million. Again, a lot of the sales shows up there, but it doesn't all show up in the general fund. I mean, there were transfers out, as you know, to a lot of other areas in the county. So it's not the whole 2.2 million there. But I did account for a lot of that, obviously. But it is in the positive, which we haven't seen for a few years on the general fund. The other, major funds are going to fluctuate some from year to year, and they're based on more specific activity. The general fund basically catches everything else. It isn't really a specific fund, but you'll see that those fund balances are all positive. The liability insurance fund has a pretty significant fund balance of $1.3 million. And as I said, every other fund, you see that one column that says other governmental funds. All of those others put together do show a negative unassigned of $3,386, but above that you see all of the restricted amounts that are positive for those various restricted purposes. So overall, the unassigned, again, you carry it all the way across, it's still a positive number of $422,000. Now, since we've been talking about two types of statements here, there are reconciliations. 17 is the balance sheet, so that you can make some sense out of why we have two different sets of numbers on full accrual and a modified cash basis. It does give you that reconciliation, so you can tie those two together. And then page 19 will do that for the statement of revenues and expenditures also. So, looking at page 18 on, again, the major funds, and pointing to the general fund. Again, if I move all the way to the bottom, you do see the 2.2 here, but what I was referring to was a number above it, which is transfers out, about $860,000. So, of that money that came in, and then that's really used in various different places across the funds of the county. So we do show that going from the $810,000 negative beginning fund balance to $428,000 positive ending fund balance in the general fund as a result, really because if you look up before the other financing sources, you see the excess of expenditures over revenue in the general fund before all of this, all the transfers and the sales of $1,073,000 negative. That's about a $350,000 more negative number than it was last year. So, from an operations standpoint. And I think from a significant standpoint, there's some more financial statements there as we get back to the footnotes. But I would like to make a few comments on the footnotes starting on page 24. There is a lot of disclosure here. Required disclosure. I just want to point out a couple of things that I know, Jeff, that we talked about in our meeting too. First one being on page, because we are talking about, there's a significant amount in cash reserve in investment at this point. You saw that on the first page of $5 million or so. But with all the investments and everything, including the fiduciary funds, on page 33, cash and investments, note 4, it's $10.7 million total. Now the fiduciary funds don't, those aren't for the county's use, but the top number there is about $5.6 million. So how is all that money accounted for and deposited and covered as far as insurance and collateral? And we're required to disclose this on page 35, note 4 at the top. The second paragraph shows that And I think, again, we've kind of communicated that, and Jeff, I think, there's been steps taken to maybe take a look at that. But it does state there that almost 1.4 million of that balance was uninsured and uncollateralized at the end of November of 13. And there was an amount there last year, but it was like 185,000. So again, there was an influx of cash, this year, and you either get collateral from existing banks or you spread it against, because in the past, before they changed the policy, FDIC, it was unlimited there for several years. You don't have that anymore. It's 250,000 coverage. So we're required to point that out. Since we're talking about depreciation, page 37, note 5, right there in the middle, does show you where the $392,000 of depreciation is recorded in the various activities on the entity-wide part of the statement, that very first income statement we looked at. Just so if you're looking at some of those individual expense levels, if you wanted to count it, you could back out that depreciation number. There's disclosures on long-term debt. We talked about the liabilities and the pension plans and the other post-employment benefits, just as we're flipping through the pages back here. Talked about component unit, page 48 is the building commission. So you can see the result of their audit on November 30th of 13, their assets, their liabilities, their net position, right there in the middle of $1,159,000. Their operating income for the year down a little further of $964,000. So the numbers they're just not included in the financial statement in the front. And beyond that then is supplemental information. Like I said, every fund is shown here. Balance sheet, statement of revenues and expenditures, the comparison of the budget for each one, and then all that takes you back to that last page that we referred to earlier that does show the assessed valuations, the extensions, and the tax collections over the last 3 years, 11, 12, and 13. And you can see, there was a little increase in assessed values for each of the year, but you can see overall the levy amount that went down from last year to this year on the individual items there. So I guess those are my overall comments. Jeff, I want to proceed from here as far as any questions or.
Does the board have any questions? Not this time.
No.
Pretty good. Yep. What's your overall opinion of it?
There's a couple of ways of looking at a government's financial statements and financial position. If you're running a business, you are going to look at your results for the year, but you're also going to look strongly at, what are your assets and liabilities, what's your financial position. And I think generally in the government situation, it's a little bit turned around. I mean, you do want to see your assets and the financial position you're at, but your results each year are, important and significant. And the numbers here are showing a lessening of that, a worse result of that from last year to this year. I know whenever we talked, Jeff, there were indications of things that have been put in place of some of the areas that should be improving, going into 14 here, which we're not able to see and hear yet. But I would say that, yes, there's some concern of the lessening of that result from year to year on an operating basis standpoint. A lot of that is depreciation on the overall, and the result of the positive positions that are shown here now as a result of one-time influxes, that you can't count on each year. I guess the other thing that I think we've talked about, and we haven't done this with Mercer County, we participate with it's actually another firm that does this with some of our governments, where they go through a thorough analysis of financial statement. They've got a proprietary system, more or less, that they plug the numbers into. And they come out with a rating of 1 to 10 in several different areas. And it is very helpful. It does cost to go through that. I mean, they have developed this system of trying to evaluate governments and give them some kind of benchmark compared to other similar governments. And they look at results. They also look at some of the balances too. But the results here would probably pull that, just given an overall ballpark, pull that number down into the middle range or below, 4 or 5 out of 10, which I'm just guessing on that without running the numbers. Which I think, in most cases where we presented that report, that would be a reason for concern. You'd like to see it in 7, at least 7 range, 7 to 8 range. When you look at the fund statements, I think there's some improvements there without that don't have the depreciation in there. Some individual areas, some pockets, I think you can see some positives in there in the financial report. But as an overall, the worsening of the position really from 12 to 13.
Okay, thank you.
Yeah.
Well, what should we do? Should we postpone this delayed meeting to reconvene after the regular board meeting? That's what we're gonna have to do. Let's have a motion to delay this, to continue the finance meeting after the general board meeting is over.
I see what they're gonna do.
Moved and seconded, all in favor? Aye. Opposed, same sign. Okay, we'll